I'm very bullish on gold. And I'm even more bullish on silver because silver is a more volatile commodity than gold. It's a much smaller market. There's not a lot of silver in storage above ground. There's a 300 million ounce per year deficit in mining silver. So bullish on both. I think gold is going to wind up going to $10,000, $15,000 an ounce, but not because that's what it should be relative to other things, but as a monetary finesse.
What happens if the Treasury market gets smoked? What happens if the U.S. Treasury doesn't like us and takes the Treasuries? So what they're doing is they're putting something on their balance sheet that cannot bankrupt. It's the only gold and silver, the only two monies on the planet that cannot default.
As of late December 2025, the precious metals market is witnessing a historic everything rally, with gold shattering the $4,500 per ounce barrier and silver skyrocketing past $75. Driven by aggressive central bank buying, record industrial demand for AI infrastructure, and a global shift toward de-dollarization, these metals have posted annual gains of up to 155%. With liquidity thinning and geopolitical tensions rising, experts warn that we may be entering an era where hard assets are no longer just a hedge. They are the only secure wealth left. Precious metals expert Bill Holter warns that we're witnessing the collapse of the fiat currency system, with governments forced to print endlessly to cover unpayable debts, driving treasuries into chaos and currencies toward zero. He stresses gold and silver as the only assets that can't default, predicts silver shortages will ignite explosive price moves first, and cautions, be careful what you wish for with sky-high prices. Will physical metals vanish from markets before you secure yours? Watch to the end to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
First and foremost, it's important to understand that gold and silver don't change. They don't go up and down. An ounce is an ounce. An ounce today is an ounce 100 years ago and will be an ounce 100 years from now. What's changing are the currencies. And I believe what you're looking at right now is this is the end of the fiat experiment. You're watching currencies devalue. I mean, if you have something go up 100%, it means if you've got silver or gold that goes up 100%, that's a devaluation of 50% of the currency. And that's what you're watching worldwide, is that all currencies worldwide are devaluing. And these are not traders coming in. These are buyers that are cash and carry. They're buying a metal, they're having it delivered to them because they understand that the currencies are devaluing and they're ultimately going to devalue to zero. So you either have gold, you either have silver, or you're not going to have wealth when this is all done. The problem is investors sensing monetization are just going to dump treasuries. I've talked about this several times before, that if you look at the last easing cycle, rates went higher, market rates went higher. And here we are again, they're starting to cut again. And where are rates? Rates are slightly higher than where they cut rates a couple weeks ago. So it's the Fed losing control of the yield curve. And that's a problem. That you have to understand that the reason gold and silver have been suppressed for all this time is because the U.S. Treasury had to be able to borrow basically unlimited amounts of money. And that's what this game is all about. There's mathematically, they have to monetize, and mathematically it won't work. The money doesn't exist to pay the debt back and to pay the debt service. So what do they have to do? They've got to print more. And when they print more, that dilutes what's in existence. And they will dilute to oblivion. If gold and silver are unavailable, markets will be closed. And if markets are closed, you're not going to be able to buy miners. You're not going to be able to buy anything. Banks will be closed, et cetera, et cetera. I would say that we are at the point now, and I warned people for many, many years. I always said, be careful what you wish for. People are talking about $100, $200 silver, $5,000, $10,000 gold. And I always said, be careful what you wish for, because what kind of world are we going to live in under that scenario? The reason you be careful what you wish for is because, as I mentioned, everything is derivatized. You've got massive shorts that were put on for years and years and years to suppress the price. Now those shorts are being broken, and you're going to see dead bodies. And those dead bodies will spread because of counterparty. So, again, let me just say again, be careful what you wish for. Are you hoping for $200, $500 silver? Are you hoping for $10, $20, $50,000 gold? Be careful. I think what you're looking at is the economy is nowhere near as good as the official government statistics. There's no money on the streets, and people are raising money by liquidating metal just to live. Prior to, let's say, 2005, the United States was the game. But now it's the entire world, and the United States is not it's not leading as far as purchasing gold and silver. You're seeing massive demand out of Asia, and Asia, those people are cash and carry. Americans accepted, a contract for this, a contract for that, as good as gold, so to speak. But that's not the case. What we're looking at now is you've got Indians, you've got the Chinese. When they buy, they want the metal. And the problem is you can't print the metal. The metal doesn't exist. The real shortage is in silver. Gold is considered money. Silver is not primarily considered money. The demand for silver comes from so many different industries, and it is cash and carry. You can't put a paper contract into technology. You can't put a paper contract into a medicinal use. It has to be the real metal, and the problem is they can't print it. And that's where the severe shortage is showing right now, and that's where it's going to break, is in silver, not gold. Gold will follow. And if there was no such thing as silver, gold would ultimately break on its own, but silver is going to be the blasting cap.
Moving into the next phase of this historic market, the focus is shifting toward a total monetary reset. While many see precious metals simply as commodities, the real story lies in their return to daily commerce as stable representations of value. Legendary investor DougCasey remains ultra-bullish, viewing gold as true money, the only financial asset free from counterparty risk, and even more excited about silver's volatility and tiny above-ground supply facing huge annual deficits. He urges starting to accumulate now, even if it's no longer cheap, while seeing a future for Bitcoin alongside precious metals. Could gold soon back everyday transactions again? Stay tuned to hear his full, bold outlook. Now let's watch some clips from his interview.
I've said for the last several years that gold was reasonably priced. Once it got above $33,000, $3,500 an ounce, it was reasonably priced relative to other things, houses, cars, meals in restaurants, and so forth. It had pretty well caught up after having been suppressed by mainly the U.S. government from the days when it was $35 an ounce. So we're living in a different world right now. Silver is a different metal. People often say gold and silver, but they have share some dynamics, but there's a lot of very different things as well. So I guess the question is, where are we in this current bull market, and how high can it go? Yes, we're in a bull market, and yes, it's going to go a lot higher. And at some point, gold is going to go above where it should be. Where might that be? Listen, I'm of the opinion that at some point in the not too distant future, we're going to be using gold as actual money again, the way it was before 1933. Actually in day-to-day commerce, maybe not passing gold coins around to each other, but with certificates that represent gold. Answer to the question, I'm very bullish on gold. And I'm even more bullish on silver because silver is a more volatile commodity than gold. It's a much smaller market. There's not a lot of silver in storage above ground. There's a 300 million ounce per year deficit in mining silver. So, yeah, bullish on both. As far as gold is concerned, gold is money. And its value in fiat currencies fluctuates. But look, I've been buying gold, putting it away for well over 50 years at this point, never sold an ounce. And when it drops 50%, it doesn't bother me. I want the asset. Now, that was easy for me to say as little as 10 years ago when gold was manifestly cheap. Now, with gold close to 4,500, should people buy it now if they don't have any? And yeah, I hate to say this because it's not cheap anymore by any means, but there can be a real panic into gold. For instance, if the US government decides to make the dollar redeemable again with gold to establish faith in the dollar, at what price would they have to pick to make each dollar redeemable in gold? Well, it depends on what you want to say is the money supply. Do you want to say it's just dollars outside the US or M1 or M3? What do you want to count? I think gold is going to wind up going to $10,000, $15,000 an ounce. But not because that's what it should be relative to other things, but as a monetary phenomenon. So the answer to the question is, yeah, gold is the only financial asset that's not simultaneously somebody else's liability. So if you don't have any, start buying it. I mean, just start buying it. Start building the asset. Better late than never. And in that breath, I should mention Bitcoin. I've been a fan of Bitcoin and a buyer of Bitcoin since 2017. I was a little late to the party. Not too late. But I think that Bitcoin also has a future alongside gold and alongside silver, which is also a semi-monetary metal.
Ultimately, both Bill Holter and DougCasey converge on a single, sobering reality. The global financial system is facing a mathematical breaking point. While gold acts as the bedrock for a new monetary reset, silver remains the volatile blasting cap, capable of detonating first due to its extreme physical scarcity. Their shared message is clear. We are transitioning from a world of paper promises to one of tangible assets. By securing physical metal now, you aren't just speculating. You are opting out of a failing experiment and ensuring your wealth survives the inevitable collapse of the fiat era. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.